Good afternoon and welcome to NYFP. On this Veterans Day, we're seeing the major U.S. stock averages rally and hold with a gain of at least 2%. Joining me now is Alan Valdes of DME Securities. Happy Friday, Alan. Thanks for joining me.
Thanks for having me.
Well, we are seeing a rally on this Friday following some progress from Italy as well as Greece. And on the heels of that better than expected University of Michigan consumer sentiment figure. But what do you think of today's rally?
Well, you know, you're 100% right. We did have better news out, but also, like you mentioned early on, it's Veterans Day, so the bond market's closed. So we have no interference from those guys over there where the spreads are going, helping the rally here. But, you know, what's the real market? Was it down is it the market that was down 400 on Tuesday, or is it the market that's up about 300 today? So we don't really put too much credence in this. The volume's pretty light. It's not real heavy, even though it is Veterans Day. We expect light volume. But even on Monday when the market was down, it was that last hour that picked up. Otherwise, the volume was very light. So it's just a news-driven market. That's all it is. I mean, whether it's negative or positive, that's the only thing driving this market. And it's not, there's no sustainability to any of these things, up or down. It's just a trader's market.
Well, Alan, I'm sure you'll be keeping an eye on bond yields, especially out from the Eurozone next week. But we also get key economic data as well as earnings out from the U.S. as well as the Eurozone. What do you think investors should be watching?
Well, you know, you're 100% right. We got a slew of news next week. Earnings are almost done, but, you know, we have the elections in Spain. We'll get their results. We'll be watching that. Most of the big news is going to be predicated out of Europe. The news here in America, I mean, it's been a little better. It's been ticking better. Nothing major to write home about, but that seems to be the MO lately. And then, of course, we get the super committee. We're going to see if there's going to be a finding with that super committee. That's the big thing to watch. What happens there? Do the automatic cuts take place? Do these guys finally get over their bipartisan problems and get something done? So we'll be watching that real closely. That's probably the biggest news next week.
Well, Alan, I'm glad you mentioned the super committee deadline that will be coming up right before Thanksgiving here in the U.S. But how much do you think that will affect the equity markets?
Well, you know, it won't affect it really much initially, but if we get another downgrade from Fitch or Moody's, that's where you may see a real move in the market. And I think my feeling is they probably won't get anything done. That's the way this committee seems to be working. And you will see a downgrade, which will, of course, raise borrowing costs, which will affect the market in the long run. So that's where you got a key. If, in fact, we get another downgrade, which would raise our borrowing costs for people.
Okay, Alan, I think we've hit on most of the major topics, but I do want to ask you about crude before I let you go. In today's trading session, we're seeing crude edge closer to the $99 a barrel level. What is behind the gain?
Well, you know, there's a lot of things going on in crude. One, the economy seems doing better, and obviously when the economy does better, we use more energy. The second thing, there are things going on in Europe that makes crude more attractive also with the dollar. But, you know, in the long run, every time crude gets to this $100 level, remember, every penny gasoline goes up at the tank, at the pump, that's $1 billion out of consumer spending. So at 100, it's like the tipping point. And now we're going into the shopping for the holiday season. So we got to watch crude, even though we like to see crude from a trader's point go up because it means the economy's doing better at a point, and the point usually is $100. We have to watch consumer spending.
Well, Alan, that's a lot to consider, so thank you very much for weighing in on all these topics.
Thank you so much.